Boom! What's going on, everybody? 360 Digital Closing Bell Week Look Back podcast here on this gorgeous September 18th, 2020. I'm pretty sure this is the episode 48. We've been cranking these out. As always, I'm your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How are you doing this morning?
It's a beautiful day in the neighborhood, and I'm back home.
How's it feel to be back in the zombie apocalypse bomb shelter?
Somebody's got to survive.
Yeah, somebody's got to keep the website up when this all goes south. We seriously, guys, we have a great show for you lined up. We're kind of going to walk through everything that happened this week, and we talk about a choppy week in the equities markets. Crude oil price saw a little increase. We saw some crazy stuff for both the crude oil and natural gas inventory. We should look for rig counts this morning. I think if you're an Enverus subscriber, you got it last night, so we may go peek at those numbers. Y'all rig count dashboards will be updated later today along with Baker. He's like the rest of America. Stu's got some stuff in the international news desk. We'll check in with obviously the levels for crude oil. I mean, we're kind of back into a lot more what I would call tradable territory. If you're more of a day trader, a lot more levels, things to look at. So we'll dive into all things that. Before we get going, guys, this show is brought to you, as I mentioned, by the world's greatest website, oilandgas360.com, the place for all of your energy news, energy finance news, specifically the 360 news desk. You go on the top little scroll bar, go to 360 Energy Expert, drop that down and find 360 News Desk, bookmark it, love it, check it out every day. The place to go for just a one-stop shop for all of your energy finance news. You can also find Oil and Gas 360 on all of the social medias, LinkedIn, Twitter, Facebook. We have a Oil and Gas 360 news desk, which literally pumps out every single article that goes on Oil and Gas 360. If you watch the live show every day, it's the ticker that goes across the bottom, so that's kind of cool. So just check it out, guys. Follow us. Follow me and Stu on LinkedIn. Connect with us. You can email the show, mtanner@enercominc.com. You should also check out Stu's podcast, The Energy Expert, the Energy 360 podcast, which is by Enercom, where Stu interviews a bunch of energy thought leaders. It's been good. We starting Monday, we have some wild stuff coming up.
Oh, you bet. And I was able to act as Mr. Producer for one of your fabulous interviews, dude. You rocked.
We'll have to figure out I don't even know what is the schedule. Are we going to drop Casey Johnson Monday? What are we looking at? What's even the schedule look like? I'm learning on this podcast like everybody else.
I've been so busy this week.
So busy. But we have a bunch stacked up, which is nice.
Yes, we have the interview with the president of Liberty. I believe that's going to target Tuesday. We have the Casey Johnson story Monday. We have Enverus we've got to get out. We've got, good grief.
Exactly.
I have about 4 authors lined up with some.
Yeah, I know.
And we've got one of the head lobbyist group out of Europe coming up.
What are they lobbying?
LNG, and he is a good guy. Really.
How do we get into lobbying? It seems like it's a lucrative business model.
I don't know.
I'm going to ask them on the podcast. How do we get into this business? But seriously, guys, check out that podcast, iTunes, Spotify. Also check out the Energy Expert Network landing page on the world's greatest website, oilandgas360.com. Please subscribe to this show, the Oil and Gas Show, on Oil and Gas 360 and Enercom. We come twice a week for a weekly. You can also check out the 360 Digital Closing Bell podcast feed, which pretty much has everything we do. So you'll get this podcast. You also get every single show every single day. So that feed gets bombed. So subscribe to it if you dare. But definitely subscribe to the Oil and Gas Show. You'll be getting these bi-weekly shows every single week. All right, I think it's time. I mean, it was a pretty choppy week, Stu. If you remember, at the end of last week, we were really big. It pretty much stayed flat. If you look a lot what happens, if you kind of go back and historically look what happens on each Friday, fairly flat. Nothing. I mean, think about it, Stu. People are winding down. Nobody grinds like we do on a Friday, especially traders. They wind down. So Fridays tend to stay fairly flat unless there's some crazy news. So that middle of the week last week, fairly red. So as we moved into this Monday, really there was a couple optimistic points that really led indices on Monday up. One was, and yes, we're talking TikTok is officially getting purchased by Oracle pending the approval of U.S. regulators, and specifically now it looks like they're waiting on President Trump. Latest reports are as of yesterday that Mnuchin and the Treasury Department has signed off on it, and really now it's just kind of on the president's table. As I'm watching CNBC right now, a new report is dropping specifically on that. If you are on TikTok and WeChat, they're going to start blocking that as of Sunday. So I don't know how they do that. I think it's just an IP address. But yeah, come Sunday, as if there's no agreement, TikTok's gone. So are you on TikTok, Stu? Have you ever done one?
Heck no. And let me tell you something, okay? Being a nerd is, you could make money being a nerd. I've been a nerd for a long time. Now, those servers, if they're moved to the US, software, and the Chinese government is still going to be pulling all of your information off of your phone.
Yep.
TikTok is a disaster waiting for it to happen for anybody that's using it.
So what I'm hearing is we're not going to put the show on TikTok.
Heck no.
Fair enough. I don't think I want to do that either. It's just, not to talk too much about TikTok, but I just find it funny. The most old school, as Stu likes to say, boomer software is now partnering with the most Generation Z 10-year-old. It's just, I find it hilarious, the pairing. I hope it works out for them. On the Crude side, guys, we got hammered on Monday, and this is where it was or not hammered Monday. Things were fairly flat on Monday. We saw over the weekend, we saw the drop into 37 handle. And this is where Monday, when we talked about crude oil prices, they pretty much just stayed fairly flat. And we saw $37. I mean, the point of control for the last 5 days is 37.33. And that's where really kind of Monday we hung out on the crude oil side. We look at some of the big things that happened. The first was, Oasis. That was, the 14th. We were waiting that night to figure out if Oasis was going to make their interest payment. An update to that, they did not. So I ran that on the news desk this morning. They had till September 15th to either pay around $30 million in interest. They had so just to give you an idea, they had about $288 million drawn that they were paying interest on of a $450 million revolver. And I don't know what interest rate they're at. So we could go calculate it. But the number that I saw in my little research, no napkin math, so this is just what I was reading, it was about $30 million. And to kind of give you an idea, they had like $77 million cash on hand come quarter two 2020. So yeah, you kind of knew they weren't going to make this. So we're probably in another Lone Star situation where they're going to get 30-day extension. They're going to come and drop October 15th that they need another 15-day extension. And this will probably drag its feet until early November, unless they decide to come up with something. I mean, if oil continues to rise, because as we stand here right now, Stu, we're really looking at, oil's 40.69. Who knows if it's going to necessarily stay up here? We're in the midst of actually a free fall.
So we're going to
give you an idea. Podcast started 10 minutes ago. Oil was 40 even, and now we're all the way down to 40.60 in a free fall.
So this one we can kind of put on the burner, and we might be able to say the old Monty Python line, "I'm not quite dead yet." So if they
or
do,
the Princess Bride, he's only mostly dead. He's only mostly dead. You can still, you know what I mean? He's not dead. He's mostly dead. So we'll see. We'll be following Oasis closely. I mean, a pure Bakken player, it's not hard to figure this one out. We're not, we're no experts saying that, Oasis is in trouble. It's, all signs point to that. There's also some, to talk about energy as a whole, there were some biofuel mandates that were denied by the EPA, and this is pretty big. So to give you an idea, back in the George Bush administration, in a big push to farmer, middle of America, and we did a real push to ethanol. I think at the time it was probably a good decision. Clearly now it was a terrible decision to have to mandate the fact that we use food, and people would say, it's corn, it's not going to food. I get the arguments all ways. Point is, I think now the cons have sort of outweighed the pros, it actually kind of hurts the farming industry because it really shifts production away from eatable corn to now we're just producing all this corn for the ethanol. Trump isn't the biggest ethanol fan, as you know, the oil and gas industry doesn't like ethanol, clearly. And so Trump, being a fan of the oil and gas industry, was supplying a lot of waivers to refineries to not have to create biofuels, and basically, and he was kind of upsetting the farmers a little because this is it's kind of nice if you're a farmer. If the government comes in and says, yo, we're going to require that 15% of the fuel supply is off corn, and you're one of 2% of the country that makes corn. Great. You know what I mean? Like, it's just a good business model. I told Ron, the president of Liberty, that's a situation to be in when your share of the pie gets bigger and then the whole pie gets smaller.
Right.
So Trump had been pretty lenient on waiving these waivers. Well, as he, not today, Junior. It's basically what he said on Monday. Not going to happen. He was actually 8 waivers that he went ahead and denied. And sort of, I mean, it's political season, so we're going to say everything Trump and anything that happens in the next 2 weeks or in the next 6 months that involves President Trump or Joe Biden, it's all politics. So yeah, it's probably a political move here, waving these banners. He's got to show up to Iowa in 4 months and give a stump speech. Yeah, he's probably, this makes total sense to me. I'm not necessarily sure if this is a signal moving forward that he's gung-ho on biofuels, but it'll be interesting to see, between me and you, Stu. I just think it's politics. On the international side, Stu, on Monday, BP Energy Week kicked off, and they did a whole thing. And I don't know, is that something you want to wait till the end to cover? I know there's kind of a lot of holistic views we have on it. You kind of want to save the ESG stuff for the end because BP Week ended yesterday.
Yeah, we can save that.
Cool. So we'll hit up, and there's some pretty crazy things. I got a couple things I want to say about some of the things they dropped, so don't let me forget to do that. We roll into Tuesday. S&P 500, the overall equities markets dropped. Crude oil prices jumped heavily, and this is when we started seeing Hurricane Sally really come into effect. We saw about 27% of that Gulf of Mexico production shut off. Shell shut in a bunch of its production at all of its Appomattox platforms. Olympus, Mars, and Ursa, which are some of the really bigger fields out there, Matterhorn as well, all shut down. Chevron shut down its Blind Faith Deepwater Gulf, which is I actually got a buddy who worked out in that field. It's some pretty crazy stuff. He sent me some pictures too. These rigs now are they were cities to begin with. These things are these things are complexes, and city isn't the right word. These things are suburbs. It's got city. These things. The thing he showed me a picture of, and he didn't send me a picture of this, but I googled the rig. I forget what it is. I should have pulled it up. There's like 4 helicopter pads on it. So
Wow.
it was unbelievable. It's like it's almost like a big L shape. It's nuts, especially with this deep water stuff, because you got to house all this food. It's really interesting.
It's a beautiful day in the neighborhood.
It is. No, and I mean, honestly, he sends me some of the most gorgeous pictures in the morning. Just, it's a lonely life out there in the Gulf. So that's really what happened on Tuesday. We did also hold the funeral for Lone Star Resources. They've been only mostly dead for about 60 days. Finally go ahead and have to bite the bullet here. File just a classic Chapter 11. It's about 96% of their equity holders, 67% of their bond holders. So this one's definitely going to go through. On the international side, Stu, you had Petrobras. Any update on that? That's the largest oil production from a single well. What's the number again?
I don't
It was like 220,000 barrels a day. Is that real? I'm clicking the link here because I got all my show notes up for the individual days. 220,000 barrels a day.
Wow.
Let's see. Holy smokes. According to Petrobras, it'll be the largest oil production unit operating on the Brazilian coast and one of the largest with a daily processing capacity of 225,000 barrels. That's one well?
One well. That's crazy. Talk about it.
They go the capacity of the unit. So when they talk about the capacity of the unit, that's one well.
One well. That's the biggest I've ever heard of.
220. What are the economics on that? Let's just give me a second here. So you're probably doing.
That's more than some countries make.
More than some countries, but let's just do. We're into napkin math here. So what average G&A per barrel? $4 or $5. Okay.
That-
So oil's 40. What now? Oil's 40 even. So we'll go -5 because we like risk. Transportation costs. Where's this? Brazil offshore.
bunch.
Yes, right. Let's take 10 just to be sure. And then we're going to take off another 2 for hedging.
Unless you're using oil and gas 360 tankers, we cut deals.
Yeah, their we gotta take out their subscription they're about to buy too. So we gotta worry about that. I mean, that's a $5.1 million revenue well per day, assuming obviously one they can sell it, and that's assuming they're taking $23. I mean, if they're getting 15 per barrel.
Yep. But I wonder what the day rate rent is for that rig. That's gonna.
I heard from, I have a friend, she no longer works there, but she was BP offshore in the Gulf. She told me she would sign statements, $500,000 a day for rent in one of these rigs.
Wow.
And that's where you get down to like 2 hours save, like 3 hours is gold out there.
Well,
they'll easily pump, I did the math, again, napkin math, but they'll easily pump 150 million into these offshore wells before they'll even get a dime back.
Well, our friends over at Data Gumbo, we just interviewed Andrew, the president and CEO, excuse me, co-founder. And with blockchain technology, they can save millions per minute. So
it wasn't millions per minute; it was millions over a lifespan.
Oh, okay.
Like over a year.
Oh, I thought
the case study that he showed was it was like 4 million in a year, but that was because what you said, it is millions in seconds, because they're automating. The reason why you get that 4 million within that year is because every step of the way they're using their smart contract technology, their Gumbo net, to automate the process. So you are right. You're not going to, if it was millions of minutes to, I'm starting an oil company and just signing up then, because I'll take millions.
That was on his drilling platform. What you were referring to was his invoicing platform.
He's got it. They've got so much good stuff over there. This is free advertising. Go check them out, guys. datagumbo.com. All of your smart contract blockchain stuff. I mean, it was Tuesday. We were getting word Tuesday afternoon, and this is where I also supported oil prices. API came out and dropped, or API came out and actually kind of put a little damper on what was originally supposed to be an expected draw of crude oil inventory, Stu. They predicted a draw. There was a predicted build, or no, there was a predicted draw. They predicted at 2:30 there was going to be a build. EIA on Wednesday comes out, 4 million draw, and that's really what drove oil prices when you talk about, as we sit here today, as we sit here today, that huge spike in oil really due to the fact that crude oil inventories came out very, very bullish. And if we pull up the numbers here on the Oil and Gas 360 crude oil dashboards, I mentioned this on the show Wednesday, but I'll dive into it a little more here. U.S. fuel production was up 900,000 barrels, but why is oil spiking? Crude inventory is a draw of 4.3 million. Well, a lot of that has to do with, when we first started the show, like, oh, good. It seems like it was forever ago, but it was probably 6 months ago. What was driving crude oil inventories on a weekly basis changes. 10 years ago it was, I don't even know what it was 10 years ago. It's probably, OPEC exports. The numbers and what traders care about fluctuate on a rolling yearly basis. And specifically when you talk about crude oil inventories and on a week-to-week basis, what are the algos? And that's because that's what you're wondering. What are the algos keying in on? What are the people who are programming this? What are they keying in on? And recently, it's been stock draws, stock builds. And that's normally what it is. But we went through a prolonged period where, and I was pounding this in the table, where oil production was the key driver of whether or not prices, specifically on that 8:30 EIA drop, will go up or down. That shifts. So if you're looking to get in and trade. I love trade at 8:30 crude oil inventories because it's all algos. It's you and you're just trying to catch a wave. It's go go on Instagram or TikTok while you've still got it and just search surfing. It's the same thing. Or you're just trying to catch a wave that's already there. We're not trying to outsmart the market. We're not trying to develop some really nifty thing. We're trying to figure out, all right, where the algo's going to go. I'm going to catch along. Again, why we need to be trading order flow. Don't be doing this with price action. Don't be doing this with price action. That's like trying to surf without a surfboard. You're just now out there. It's not going to work. You're just going to get flipped. Get yourself a surfboard. That's news of the day. Get yourself a surfboard. But watch yourself. And sit down and see, okay, what are the algos going to do today? I'm like, and over the past 2 weeks, that sentiment has shifted from, all right, we get production is low. We're now looking at what the stock builds are doing. We're now looking, there's other data around that. So as we move into next week, we'll kind of cover on Monday what I think, and we'll start doing that on Mondays, covering what I think some of the biggest drivers of crude oil inventories that week will be, and not drivers, but what are some of the things that when we talk about that 8:30 DOE launch, traders are going to be keying in on? Is it this week? Is it crude oil inventories draws? Is it production? Is it refinery utilization? We're back now 75.8%, which is a good number to have. Crude stocks, as you can see, both on a moving average basis, Cushing has fallen below its 5-year moving average, which is good to see. Total U.S. stocks have not, but we're kind of coming back and, as we like to call it in economics, a reversion to the mean. So good to see on that. Other things that happened on Wednesday. This was part of BP week. So I won't. I'll be remiss if I don't cover it. We will come back to that at the end because there's another story we got to cover, Stu. On the international on desk, you had that day. There was an EU Turkey update. This is something you've been covering. Give me the highlights from that.
Well, Turkey has been very aggressive trying to survive and become a energy independent, and they've been going nuts. And on that show or news story, we were kind of having a little fun that the EU was rolling up a newspaper and smacking Turkey in the nose like a puppy, because they are tired of Turkey coming in and really threatening war against Cyprus. And so all of this is stemming from Russia turning off the spigot a couple of years ago. Everybody's running around when you have the Leviathan field now, big, huge. Turkey has now extended their entire offshore all the way to Libya. And in the story this week, they are being the EMP for Libya. Libya had lost $90 million worth of production over the last little bit, and they're now paying Turkey big bucks just to come in to get a little bit of cash. So all that happened this week with the EU really slapping.
Yeah, very interesting. And not to toot our own horn here, but we ran on the news desk about an hour ago. Sources were telling us Oasis had officially missed that interest payment.
Ooh.
Guess what? They just announced a press release on their website. We beat the press release from Oasis. That's why you come to Oil and Gas 360 right there, folks. We're beating the press release. Yes, so Oasis just officially announced they've entered a 30-day grace period with their lenders. They missed their interest payments on their 6.875% notes due in 2020 and their 2.625 notes due in 2020. The company reported in a press release. Ooh, dun, dun, dun.
Oh, my goodness. So are you going to use, I'm not quite dead yet, but I'm mostly dead?
Yeah, he's only mostly. We got to go get the little chocolate pill thing or whatever and go shove it down their throat.
Miracle Max. He was even
Miracle Max and his nagging wife. That's one of my all-time favorite movies. I love that guy. As we move in to Friday, so now as we look at crude oil price, we're sitting at, as we roll into as we roll into Friday, we're sitting at, we're sitting at 40 handle right now, and it did drop below on that day, but then really, pit opened on Thursday yesterday was just a huge driver up. And really what that had a lot to do with was Hurricane Sally came in a little more production, a little more shut off than expected. Shot oil up from, it was trading at 39.81 all the way up to, really ended trading before the night rolled over. Really at the end of the session, it ended at about 40.90. So it means a good $1.50 right there, bidding it up right there. Couple things that were really kind of moving it. One, Hurricane, as I mentioned, Hurricane Sally came in. There was a little more production. There's about 80,000 barrels that they pulled off the market. So as we move into next week, well, we're gonna, we have to look at that. Where is that? Where's that hanging in the balance as it comes to what's going to kind of drive it? So we'll be covering that. On the natural gas side, we saw like a 12% spike, and that was again due to the natural gas inventories. 89, and I rewatched the closing bell on Thursday, Stu, and I typoed the natural gas inventory build. It's 89 billion cubic feet. I said 98, but there's a screen share, and I'm literally like waving my cursor around the thing, and I just say it back. The 98, or excuse me, see, I did it again. An 89 BCF build for natural gas inventories, which is seasonally not good. We should be seeing draws. We should be seeing draws right now. We are in I am very interested for the seasonal, to put this season, attach it to a historical chart and just see the wonkiness of it, because there's a really, there's an ebb and flow to when we build in the summers, we draw in the winter. It's just how we do natural gas. The fact that we're building this kind of late into the season, it's going to be interesting. I mean, it's why I was never bullish on 390 gas. I'm sorry. It's why I was never that high for all of that stuff.
Still am.
You still are?
I still am.
You're holding out.
Man,
Other thing that happened late Thursday, in the natural gas space, EQT, largest U.S.-based natural gas producer, bid $750 million for Chevron's Appalachian assets and a couple, physical assets on the on the refining side. To give you an idea, it's about 466,000 acres. Liquids production. Give me an idea here. I don't have the article in front of me. Trying to remember off the top of my liquid. There was a decent amount of liquids production off that. I do know that this was originally bought by Chevron for $4.6 billion when you include debt, and they dumped in about $800 million investment into it. And last year they said it was considering taking a 8.17 billion charge to its earnings write down in related to this project. Give you an idea. How much liquids production's on this? They don't actually tell you. It's 800,000 acres, so it's a little bit Marcellus, Utica, and Pennsylvania. They don't tell you how much liquids production is. But do I think they're going to accept? Do I think Chevron accepts this deal? No. I think they wait it out. I think they say, we're already willing to take the loss on this. We don't need to necessarily just sell it straight up now for cash. This is, if you're EQT, why not? Because what's the worst they can say? No, you still don't own the assets. If they say yes, great, you own them. I mean, you might as well ask. That's the Tanner philosophy in life. You might as well ask, because if you don't, guess what?
It ain't gonna happen.
Yeah, it ain't gonna happen either way. So, Tanner tidbits right there. I guess the only other thing that happened yesterday that we ran on the closing bell was Whiting Petroleum provided a new guidance for their quarter 2 2020. A lot of executives coming in and out. It's about a 16% staff reduction there. Anything else on the U.S. shale side, Stu, that we missed? That kind of brings us up to this morning here as we're sitting here. It's about 6:40, 6:50 a.m. here. Oil's currently trading 40.96. Anything else on the U.S. shale side besides, obviously we've got to get to BP week here?
No, that's about it. That was about it. Excuse me.
Yeah.
Well, wait, there was one more.
I did see, this did crack me up. I did see a recent, I was reading a recent Goldman research report, and it said, this is the quote I got, Stu. This is a quote from it, about fell out my chair. Recent sell-offs present opportunities. We remain bullish on oil field services into second half 2021. Holy smokes. There's also this. I also got this written down. Those are the little quick hitters. Saudi energy minister, OPEC met, they released a statement.
Yep.
In the conference call he had afterwards, someone posted this on Twitter. I went back and rechecked it in the transcript. This is a quote from the Saudi energy minister. I will make the market jumpy.
Yep.
Ooh, spicy.
Yep.
Spicy. I will make this market jumpy.
And in the same thing, they said OPEC, they want to get rid of OPEC Plus. That's taking power away from them.
Yep.
Now, part of BP week also plays into that.
So I think that was just, I think that was the move. I think one of the overarching stories that was covering that happened all this week was on Monday through Thursday. BP was rolling out really as what they would call a reimagining of the way BP does business. To give us some highlights of what, because they've done a big pledge, and then this was really an explanation more in depth of that pledge.
Right. They are looking to go to carbon neutral in a couple different ways. And
like 2050?
2050 or even
perfect. I'll have abs by then. I can easily obtain abs by 2050.
Abs.
Well, I said if when I will get abs when BP goes green, I'm down. But it's just one of my pet peeves. There's nothing I hate worse than when a politician comes out, because politicians do this all the time and say, "Hey, Stu, I'm gonna get you the street on your road. I'm gonna get it fixed in 2080. Don't worry. Yeah. I'm going to eliminate poverty in 2090. That's right. My platform. We're going to run, me and you, the Tanner Turley ticket is poverty elimination by 2060. We're not liable for anything. So It's my pet peeve when I hear politicians say that, and it's my pet peeve when I hear we're going to go BP's a little different. Bernard Looney's not going to be around by 2050. So who knows?
In fact, the Tanner rule that you're going to get abs, I rode about 120 miles this week in Denver on my bike and loved it. So I have abs already. I got a 1-pack. And
yeah, it's like mine's on ice right now. I like to say my 6-pack's just on ice right now in the cooler.
But BP, in that OPEC, right around that, there was an article that we ran on the 17th on that. BP has said that oil production has peaked in 2019 and will never get back up there. So with BP week, they are making the real commitment to get out of oil production.
Quote unquote, they're lowering by 600,000. They're only going from 2.6 million barrels of oil production to 2 million barrels. Holy smokes. That's like saying I'm going from a pack of cigarettes a day to just 3/4 of a pack of cigarettes. And now all of a sudden I'm supposed to say I should be showing up to smoke. I should be showing up to Smokers Anonymous.
Well, they're also getting to carbon neutral by buying credits. I thought that was kind of interesting. So
isn't everybody? I mean, I think it's important to do an expansion on that lunch and learn that Dan did for us in the office this week.
Yes.
And I think we can cover a lot of this stuff because it's very eye-opening, and I want to do some more research. But the fact that, yes, most of these companies are carbon neutral, not because they actually balance emissions with carbon capture technology or whatever. It's the fact that they just buy a clean carbon credit.
But here's the hypocrisy of this BP week. Italian oil gas firm Eni and its partner BP have announced the discovery of a new gas in the Great Norris Era. It's a huge, huge new discovery. Go figure this out.
Yeah.
Okay.
Oh, that's funny.
So we're going to be carbon neutral, but we're going to buy it. We're going to be renewables, and we're not going to make any money unless there's tax credits. So I don't think BP will ever be an advertiser on our show.
No, I don't think so. But hey, we will advertise for you. Come on the show, Bernard Looney. Love the chat because, I think, if I had to guess, they're doing this as a hedge. This is a hedge against future political And what they're saying is we're a worldwide company. We don't just operate in the U.S. While the U.S. may always be friendly to fossil fuels, the rest of the world, the EU, where we operate is not friendly. So why not get out ahead of, what they might consider the eventual? I mean, they poured some thought into this. They didn't just do this overnight. Now, do I think the reasons why they did this maybe are a little misguided? And if they had called the show and if BP decided to consult with me and you, Stu, we probably would have guided them maybe in a little different of a direction. But, I can make a case for, this makes sense, especially if, they only, it makes sense because they're not even getting out of the oil business. They're going to become a midstream and refining company where the money is anyway. No one's making money on upstream anymore. So they're just going to become a midstream and a downstream company and, mess around with renewables. It was probably a profitable company, to be honest with you, Stu.
This senior executive, I don't want to get his name wrong, but part of BP Week, he did say this, and this was probably one of the most telling quotes of the week. And that is, due to the higher involvement in government regulations as we, quote, build back better, unquote, oil and gas industry, we are going to stand there. They're hedging the bet that Biden will win.
Yeah, which is interesting because their cohorts over at ConocoPhillips really don't think he's going to win. And even if they do think he's going to win, they don't see any of their stuff really being affected. So I think there's really two schools of thought here that you can kind of see these super majors as they play out here, which pretty interesting. Just to kind of some more tidbits from the Oasis filing here as it comes through. Interesting note here, Oasis Midstream Partners not included in the discussions. So, well, it makes sense. Midstream is one of the few things that's profitable right now. So good to see there. They claim sufficient liquidity. Normal business operations are continuing under the course. 30 days, we mentioned grace period. 98% of their lenders, I don't know if I believe that stat because it's a press release, but 98% of their lenders have agreed to this. 98% of their lenders are just interested in getting some sort of money back. That's what I think it should have said. Not that they've agreed to it, but that they realized this years ago their investment was down the toilet.
Oops.
Oops, yeah. Yeah, that double wolf. Anything else for kind of stories that happened this week? It was a busy-ish week.
Yesterday,
me and Stu are announcing we're launching a SPAC, by the way. We're raising, me and Stu, we're starting a SPAC. We're going to call it 360 Digital Closing Bell Acquisition Corporation. We're raising $200 million at $10 a share, and you give us 10 years, and we're going to eventually acquire a bankrupt E&P company. So throw us all your money, investors.
We are for entertainment purposes only.
Hey, but if I'm down to IPO a SPAC at this point. Everybody's doing it, Stu. We might as well.
Yeah. That would be fun.
That would be fun. I'll let you run that. Yeah, we're not going to be buying E&P, don't worry. We're not going to be buying distressed E&P assets. We're going to be going buying minerals companies. Trust me. If we're giving $200 million, I'm giving it all to Scott Noble right now. Just go buy some royalties with this and give me a check.
Oh, absolutely.
Give me a monthly check.
Or Chris over at EnergyNet. We love them both.
Love them both. Well, I think with that, let's go ahead and just move in to the levels for crude oil and natural gas for the week. As always, this segment is sponsored by Sandstone Capital Group. These guys do insanely good research and provide all of the levels via their energy glimpse solution. SandstoneCG.com, 303-907-6825. Like as we mentioned, a lot of ranges for our levels this week. You talk about, low for the week down in the, low 37s. We actually saw 36.72 get touched. Couple levels on the downside, 37.40. 37.24 is the point of control for the week. So watch yourself. There's a lot on this downside here, especially if you're a day trader from, there's a $3, what I would call not wet spot, but, we're up in, we're currently trading 40.92. That point of control for the whole 5 days. 37.24. So watch yourself. A lot of room to run on the downside here. Probably means if you're sitting in the chair today, be bearish just for the sake of it. 38.72, I think is a good level on the downside. 39.73, 40.17, 40.62. If you are trading price action, our daily point of controls have moved up, so price action is up. We're a little bit of a retraction right now. I mean, right now 40.62 is probably a good long spot, but I just think there's way too much downside risk to go ahead and get long at any point today. As we mentioned, natural gas, it was up and then it was down. It was left. It was right. We saw it hanging out, as we mentioned, in the 230s, and then as we saw with our 830 EIA dashboard, or our natural gas inventories drop, huge build, and we're also seeing cooler than expected temperatures kind of coming in a little sooner here, so that's going to drive that price of natural gas down. Currently trading basically $2 even right now. It's like $2 and then 6/10 of a penny here. So not good on the natural gas pricing side. As I mentioned, we kind of rolled over crude oil inventories there, but as we mentioned, 10.9 million U.S. field production, so that's about a $900,000 weekly change. A lot of that coming back from not Hurricane Sally, but Hurricane Laura, which was about 2 weeks ago. We saw 4.39 million draw. Total U.S. stocks stood at 49.605 million barrels. Recent gas prices, average natural gasoline price is $2.18. Good number right there. I paid $2.24 for the tank the other day. Good number. 75.8 for refinery utilization. We look at natural gas inventories, as I mentioned, a 98 billion cubic feet increase week to week. Each East, Midwest, Mountain, Pacific, South Central all saw stock increases from the previous week, which is good to see. Still lower than a year ago. But still, it's not good to see, Stu. We are higher than normal. Anything else, Stu? What else we got? We got rig counts coming out today. Well, let's just go look. I know where we can find rig counts. Give us a second.
We got some very, very good dashboards. We also have some really, really good dashboards that you're working on that are going to be great resources for our subscribers at Oil and Gas 360.
Dropped yesterday. U.S. EPA denies 54 small refineries waivers to biofuel mandate. Well, ha. Politics again, Stu. U.S. rig count up 6, 293. Except Permian slides a little bit. They lose a couple. Sandy, be quiet. My dog's barking now. She's like doing that thing where it's like, boo, boo, boo. It's okay, Sandy. 293 rigs. That's up 6. Number of oil-focused rigs climbed up 4 to 200. Natural gas rigs edged up 2 to 93. Highest since the week ending in July 1st. 4th straight week of the rise of U.S. drilling activity. 128 rigs in the Permian. That's down 2.
I don't think that's include the
DJ shed a rig.
We're about to see the Argentinian firm who said they're going to drill 250 wells. They're going to need a few rigs coming up.
They're going to need a few rigs for sure. This is funny. This is in the same article, okay? So it says this is just what kills me. So buried deep in this S&P Global article, it's like the 4th headline down in this article. BP to increase focus on U.S. upstream. What? It says BP expects to sell around 600,000 BOE of oil and gas production capacity over the next 5 years, part of its ambitious transition from an integrated hydrocarbon producer to become a global energy major. Its upstream head, Gordon Burrell, said, although selling off higher cost carbon-intensive resources, Burrell says BP still plans to grow its production at a high margin region in U.S. shale. In the U.S. shale portfolio, ongoing high grading will focus on the Permian and East Eagle Ford. BPX Energy, its U.S. shale unit, as it plans to see break-even oil prices average $35 per barrel WTI and $3 Henry Hub. Terrible in 2021. $3 BTU Henry Hub. Who are your analysts? Hire me. Way better risk analyst than that. Two, if you're pricing risk for 2021, it's already September and you're using $3 Henry Hub. Don't do 250 for risk purposes. This makes my blood boil, and it's targeting projects with 30% post-tax.
Michael, I'm going to have to buy a fibrillator for your office.
You have to come over here and just
clear.
Give me. So yeah, buried deep. So they didn't announce this on BP Week. That didn't make the Twitter page.
No.
All right. Oil and gas rigs.
Is now going to the Oil and Gas 360 news desk as standard equipment.
Yeah, you're gonna need to have to read the headline. This is I just love it. It's buried deep. This is so the title of the article is U.S. oil and gas rig count up to 6. Permian slightly leads in Veris. Okay, and then you scroll down and there's like 4 different things. It's just unbelievable. It just cracks me up. BPX Energy, though, we love those guys. They're I'm actually really close to them. They're off Platt Street right there, down by Denver Beer Company. Great place. David Lawler runs that joint. Mines guy, gotta love him.
Gotta love him.
All right, I think that's it. I'm looking at my notes here. I don't have anything else for the day, Stu. You got anything we missed?
No, just a shout out to all the folks affected by the storms, and shout out to you for great job and all of the new stuff coming out on Oil and Gas 360. Great job.
Thank you. I appreciate it. We got a lot of cool stuff coming out. Keep checking us out, guys. But with that, we're sitting here at the 50-minute mark here. We're going to let you get out of here and get back to work. For Stuart Turley, I'm Michael Tanner. Thank you for checking us out on the Oil and Gas Show podcast feed and the 360 Digital Closing Bell feed for a week look back podcast where we cover all the top stories in the energy markets. We will be back this afternoon to handle the hall pass for the digital ticker. And we will see you guys Monday for a week ahead podcast. Thank you, guys.